Hello guys, welcome back to the Broken Investors channel. I hope you guys are having a fantastic day today. And in today's episode, we're going to talk about Binance's listing of Barnbridge and what Barnbridge is and what the bond token does, right? Again, for the purposes of this video, I'm going to cover the information presented on Binance research page on Barnbridge. So I suggest you guys to go through the Binance research page first to get a peripheral idea of what this project is before you do your deep dive research on their website, right? So what is Barnbridge? As they stated here, Barnbridge is basically a derivatives protocol for structured stablecoin lending products, right? Again, it may sound like a lot of gibberish to people, but I'll try my best to explain what this project is by the end of this video, and hopefully you will have a lot of knowledge by the end of this video about what this project is, right? So Barnbridge is a derivatives protocol focused on structured stablecoin lending products. The protocol allows the unbundling of yield farms into various risk tranches and allows users to deposit stablecoins into junior and senior farming pools, right? Again, that might be extremely confusing to most of you guys, but let me try my best to explain this. So Barnbridge is basically a derivatives protocol that focuses on structured stablecoin lending products, right? What do I mean by this? So if you have some stablecoins, let's say DAI or USDC or USDT or whatever, and you want to earn yield on those, you can deposit your tokens to Barnbridge. And what Barnbridge does is it pools all the stable coins that people have deposited from multiple users, and it pools them together, and then it uses certain platforms such as Aave, Compound Finance, and even Cream Finance to deposit your tokens, and whatever yield you are generating is basically funneled into two types of pools, right? These are called tranches because they have slightly different risk levels. So there is the senior tranche, which is a tranche where if you deposit your stable coins, you get a stable APY, a stable return, right? A stable yield. But if you deposit your tokens on a junior tranche, you will get variable yield, right? But the funny thing is, in order to incentivize people to not just use the senior pool and to also use the junior pool, they are providing bond tokens as rewards for people who deposit their stable coins on the junior tranches, right? So that's basically how this entire ecosystem works. So if you see, the protocol aggregates user deposits into the underlying money markets and allocates the generated yield onto the different risk profiles, which are referred to as tranches. So whenever you want to deposit a stablecoin, you can either deposit into the junior tranche or a senior tranche, right? And when you deposit into a junior tranche, you have different risk level compared to senior tranches. Barnbridge's stablecoin pools are integrated with several DeFi protocols such as Aave, Compound Finance, and Cream Finance. And Barnbridge is working to integrate Aave's stablecoin pools on Polygon. Again, this is a very important thing to note because as numerous projects are bridging their way to Polygon, Barnbridge is also bridging to Polygon as well. And since Aave is already on Polygon, you can basically use Aave's stablecoin, which means if you deposit, let's say USDC on Aave, you get AUSDC, which is Aave USDC, right, which is a stable coin in and of itself, and you can basically use those Aave stable coins on Barnbridge and do the exact same thing, deposit into one of those two tranches and earn some yield, right? So that's basically how it works. Bond is the governance token for Barnbridge protocol and is used for the following functions. So just like every platform, Barnbridge also has its own token called the bond token, and this token serves as a governance token within the platform, and it has two main use cases, right? Again, as obviously described before, it's a governance token, so it has a governance component to it. Users can stake their bond tokens on the Barnbridge platform for voting power. Users may submit improvement proposals and vote on the protocol governance decisions. So again, Just like any DeFi platform that has a governance component to it, bond tokens can also be used for governance, in that you can basically deposit and stake your bond tokens within the platform in order to earn voting power, which you can basically use to vote within the platform to improve the platform, to vote on proposals, and so on and so forth, right? So that's one of the main use cases of the bond token. And the next use case of bond token is to be used for liquidity mining. Users can provide liquidity on the bond USDC Uniswap pair to earn liquidity mining rewards. So if you have bond tokens and an equivalent value USD value of a USDC token, you can basically provide liquidity on Uniswap and take the liquidity provision tokens and then deposit it into Barnbridge to earn more bond tokens, right? So that's how you do liquidity mining, and that's one of the other use cases of the bond token, right? So this protocol consists of the following. So when you take this platform, it has one main flagship product, and that product is called the Smart Yield. And how it works is basically users can deposit stable coins onto junior or senior farming pools. Again, just like how I explained, when you have some stable coins, you can deposit the stable coins into one of these two tranches or pools called junior or senior farming pools, right? Depositors in the senior pools receive a fixed interest rate. So again, as we discussed, if you deposit on the senior pool, you get a fixed interest rate and you don't get any bond rewards, right? Whereas the junior pools are exposed to variable interest rate returns but are incentivized with bond tokens. So if you choose to deposit your stable coins onto the junior tranches, then you can earn not only variable rewards but also bond tokens as an incentive, right? So that's basically how this platform works, right? So overall, that's the main flagship product of this platform. If you see, the project has raised $1 million from one round of private token sale, where 7.5% of the bond total token supply has been sold at $1.33 per bond. So again, if you take the seed sale round, this token has only raised $1 million, which is nothing compared to the crypto space, where they earn millions and sometimes even multi-million dollars in seed sale rounds or token sale rounds. And also the interesting thing about this project is that only 7.5% of the total bond tokens have been sold through this seed round, and only one seed round has occurred so far. And that's basically very interesting, right? So it shows that this token is kind of like sort of like a fair launch, but for the people who got in early through the private token sale round, who bought the token at $1.33 during the private token sale round, they're probably sitting in a decent gain right now, as we will be seeing pretty shortly. So as of July 5th, 2021, the total supply of bond is 10 million tokens, and the current circulating supply is 3.4 million bond, which is about 34.4% of the total token supply. Again, pretty low max supply, along with a very a decent circulating supply compared to its max supply, right? Overall, a very great project, very simple project, but for some reason people think of it as extremely complicated. But overall, if you want to access other information about this project, the Binance research page has links to it. You can access their website, source code, blog, documentation, Twitter, etc., right, on Binance research. So again, this should only be used for peripheral information. If you want to do your actual research, you have to go to the website, which is barnbridge.com, where again, if you see the website, the first thing you need to notice is they are audited. So it's obviously a token that's listed on Coinbase and Binance, so it's expected of this project to be audited, but it's interesting that they're stating here nonetheless. But overall, you can clearly see this is how the dashboard looks like, and you can basically have some amount of money in senior tranche and some amount of your stable coins in junior tranche to earn an aggregated APY, which is also listed very clearly here. So that's very cool. So if you want to launch the app itself, you can click on the launch app button. There is smart bonds and their flagship product called Smart Yield, which you can use the app to access it. They're also having a newer product that's coming in, which is Smart Alpha. Again, the purpose of Smart Alpha is beyond the scope of this video, but maybe I'll try to cover this in a future video. Since it's not really up and running, I don't want to spend too much of time talking about this, but this is an upcoming project, right? If you want any help, you can obviously access their frequently asked questions to understand more about this project. The documentation wise, you can access that one as well. You can also chat with them if you have any questions, and if you want to join their newsletter and be up to date on their updates, you can join that as well, right? So overall, a very simple website which has presented the information in bite-sized pieces for people who have trouble understanding this project, right? So if you see, if you click the top left corner of the website, you can get menus about other information about this project. It talks about governance, smart bonds, the tokens itself, and so on and so forth, which you guys can access as a part of your do your own research project, right? So let's go to the app itself. So if you click the app button, you go to app.barnbridge.com, which provides you information on all the markets. You can clearly see that they have Compound Finance, Aave, Cream Finance, and as well as Aave Polygon, which is going to be pretty big since Polygon itself is growing very rapidly. So if you see, they have different platforms or sub-platforms within the Barnbridge platform. So if you see, Compound has its own kind of coins where you can have a senior APY, which is the senior tranche, and the junior APY, along with the Barnbridge rewards. So if you deposit your USDC from Compound onto this Compound platform, you can basically get a 2.32% stable senior tranche APY or a 3.49% junior tranche APY, which is highly variable, but you also get 17.07% in bond tokens as well, right? Unfortunately for DAI on the Compound pool, you don't really get any bond tokens for some reason, but I don't know if it's a glitch or if it's being updated. But for USDC, you can clearly see 17.07% APR on your USDC in the Compound pool, right? Similarly, you have the Aave pool, which has a little bit more variety when it comes to stablecoins, DAI, GUSD, USDC, and USDT. Again, you can clearly see the stable APYs through the senior tranches here, and the unstable APYs using the junior tranches along with their respective bond rewards as well. But if you see here, they seem to have two tokens, bond token as well as Aave tokens, as APR. So I believe you will get a combination of both the tokens, which means the junior tranche would be the most preferred tranche for most people because they earn interest on their stable coins and also earn bond rewards as well as Aave rewards on top of that. Whereas on Compound Finance pool, you can only get the bond APR, right? So this is pretty interesting because this is going to definitely attract a lot of users, right? If you see Cream Finance pools, you can clearly see that they only have like 3 tokens, DAI, USDC, and Tether, and you can see their senior APYs from the senior tranche and the junior APYs along with their bond tokens. So you don't have the benefit of earning another token apart from the bond token. You just earn the interest on your stable coins plus a decent APR on bond tokens, and that's it, right? I think most people would prefer to choose the Aave markets because it has Aave junior tranche markets, which has a lot of highly high token kind of like incentives, not only the bond tokens but also the Aave tokens themselves, right? And that's basically it. You can also see the pools here. If you click the pools option, if you provide liquidity from bond and USDC pairs on Uniswap, you can deposit it here and earn an APR of 17.07% paid out in bond tokens. This is their yield farming incentive that I was talking about before. The same thing, you can do it with Aave platform itself. You can deposit the DAI bond kind of like token pools on Uniswap, and then you can deposit their LP tokens here to earn Aave rewards on top of the bond rewards as well, right? So the rewards that you'll be getting in Aave is going to be STK Aave or staked Aave, which is going to be something that you need to look into because staked Aave has some slashing penalties if the Aave platform goes down or if it loses money. So that's something that you need to bear in mind, but you'll still get a very high quality DeFi project token on top of the bond token as well, right? If you see the Cream Finance platform, they only have the bond rewards if you provide liquidity, if you provide the LP tokens on Barnbridge, and that's pretty decent APRs as well, right? So a lot of versatility when it comes to Aave, Cream Finance and Compound Finance. If you have some stable coins and if you want to kind of like deposit them on these platforms, or if you're an LP provider, you can deposit here in these platforms, in any of these platforms, and earn some really good rewards, right? So going back to the CoinGecko page for Barnbridge, this token is currently ranked 249th by market cap on CoinGecko and is currently trading at $34.32 at the time of making this video, with a 5.6% decline in the past 24 hours. Surprisingly, even after a Binance listing, right? Which means nobody is really talking about this project, and this is a good opportunity to buy. Again, not financial advice, right? So if you take the market cap of this token, it's only $119 million in market cap. In my personal opinion, I believe that this is still undervalued because of how versatile it's making use of the stable coins, and you can technically use your stable coins to earn not only some really good yields, both stable and unstable yields, but you can also earn other DeFi tokens as well, such as bond tokens as well as Aave tokens, specifically for the Aave pools, right? So this is going to attract a lot of people who hold stable coins, especially people from the boomer generation who don't really feel comfortable investing in crypto, but they feel investing, they want to get some really stable incomes on their stable coins. That would be something that this project will capture, right? So as this project starts growing, it will start absorbing a lot of people who want to generate interest on their stable coins, and I think that has a huge potential to push this token market cap to about $250 million to $500 million in the mid to long term range, right? If you take the max supply, again, this is one of my favorite things about this project. It's max supply. It's an extremely scarce token with only 10 million tokens in max supply. It's even more scarcer than Bitcoin itself, which has a max supply of 21 million tokens. And if you see, the circulating supply is only 3.4 million tokens out of the 10 million tokens. Again, a relatively equitable circulating supply compared to its max supply. But if you look at the market cap to TVL ratio, that's where I want to draw your attention to. This ratio basically says whether the token is undervalued, overvalued, or fairly valued, right? So if the market cap to TVL ratio is equal to 1, then it means the token is fairly valued. If the ratio is less than 1, it means it's undervalued, and if the ratio is greater than 1, that means it's overvalued. So based on CoinGecko's information, it seems like the token is undervalued because the value is 0.41, and if you see the total value locked on the left hand side here, there's more dollar value locked in this platform rather than the token's market cap, right? Which means there's a high chance this token can make some multiple X's, and that's definitely coming not only in the short term but also in the long term as well, right? If you look at the token price for the dollar comparative, firstly, if you see the dollar comparative, the token price has been declining since October last year, when the token price went from about $160 per token to an all-time lows of about $22 or $20 early November last year. It had been making some decent peaks, but not really something that you would say as an all-time high. But if you want to consider this as an all-time high, the all-time high price point is about $88.86. That happened mid of March this year. But overall, the token has been moving sideways, and it seems like this is a good opportunity to buy because nobody's really noticing this token and nobody's talking about this token, and this token hasn't really set a proper all-time highs yet, which means this token can pump extremely crazily in the coming months to coming years. If you take the Bitcoin compared to, on the other hand, the token was initially worth 0.01 BTC per token before coming crashing back down to an all-time lows of about 125,000 satoshis per token last November. It had been having literally no activity when it comes to Bitcoin price comparative, and it's pretty much close to its all-time lows, which makes this a really good buy opportunity with Bitcoin comparative at this moment. If you take the Ether comparative on the other hand, you can basically see that this token is pretty much at its all-time lows at its Ether comparative as well. The token was initially worth 0.44 ETH per token, and then reached an all-time lows of about somewhere between 0.035 Ether per token and 0.030 Ether per token, which is pretty much an all-time low. But if you see now, the token is making new all-time lows, which means it's a really good buy opportunity, right? Again, when it comes to the hierarchy of good buying opportunities, I would say Ethereum is a really good buying opportunity. Ether comparative is a really good buying opportunity. Bitcoin comparative comes second, and dollar comparative comes third, right? So that's pretty much how I would personally look at it. If you see the markets, this token is pretty much available on many tier 1 exchanges such as Coinbase and Binance, and Gemini, again another strong centralized exchange which is also tier 1. And if you see the decentralized exchanges, obviously it's available on Uniswap, and you can also get it from Bancore network as well, right? But if you can get it from Binance and Coinbase, I don't really think you need to look for other options. But overall, my final verdict on this token is I can see this token exploding in price point, especially since it's now available on Polygon, and Polygon itself is growing rapidly. This project will attract a lot of people who want to earn some stable income on their stable coins, and this project can not only produce some really good returns but also give exposure to other cryptocurrencies such as Bond token as well as Aave token by just taking a stable coin, right? That's something that you cannot find in several other platforms, and that's going to drive this token price to close to $50 per token by the end of this bull run. And in the long run, I believe this token can even cross $100 per token, which is not a far-fetched thought, right? Again, remember guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please hit the like button and subscribe for more videos. See you in my next video. Bye.